Today, we're going to talk about a couple of IPOs coming out. Weedmaps has agreed to a $1.5 billion deal to go public. We're also going to dive into Verano Holdings, $2.8 billion valuation, and finally get to Aphria and Tilray combining to create the biggest cannabis company in the world. Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your cannabis business podcast. To dive into all three of these M&As, or IPOs, I should say, is Katrina Glogowski, angel investor and attorney. Thanks for being back on the podcast.
Thanks, Josh.
All right, so first off, taking a look at Weedmaps going public through a $1.5 billion merger. So Weedmaps is a popular website. You can learn about dispensaries and all kinds of stuff. So they merge with Silver Spike Acquisition Corp. So that's a SPAC you may have been hearing a lot about, a specialty purpose acquisition corp. So they're valuing that website at approximately $1.5 billion, according to Reuters, which adds that it's a rare example of a business focused on cannabis sector listings on a U.S. stock exchange. So companies which involve direct listings of marijuana or which are plant touching are unable to list shares on the U.S. Stock exchanges. So kind of a big valuation. I remember maybe, was it August of 2018? They had a $420 million valuation along with PAX, kind of around the same time. And I was wondering, asking you, we had a conversation about potential liabilities or lawsuits, due to just this arbitrary $420 million valuation. And then fast forward a year and a half, is that a year and a half? Now they're worth one and a half, how much was that? 1.5 billion. I mean, that's quite the increase. I don't really see what they've done, especially during the last year in the pandemic, what they've done to increase their valuation and revenue. Haven't seen it yet. Tried to find their pitch deck. Haven't been able to find it yet, but hopefully they'll have an investor deck we can take a look at and find out. But it looks like some of their expected gross proceeds of up to $575 million from the deal, raised some private investments. So they're going to get 8.8% at $11.41 in pre-market trading. So they're expected to deliver $160 million in revenue and has been profitable for its entire 12-year history. A deal coming after less than a week after U.S. lawmakers passed to decriminalize cannabis with the MORE Act. That'll have to go to the Senate. So far you got 15 states plus DC and that are rec, and then 30 states that have medicinal. Hopefully Weedmaps are in all of those.
Well, Josh, Weedmaps, to our listeners that don't know, is a sort of a review website of various strains in various dispensaries, and also tells you where you can get a particular strain and what particular dispensaries have in on sale in stock, presumably. And I think that the valuation reflects the need for this service. My concern is there are competitors out there that Leafly comes to mind. And I don't know that Leafly is valued at $1.5 billion. And given the incredibly strict regulations around cannabis marketing, if you're a dispensary or you are a producer, it's very hard for you to advertise. And so avenues like Weedmaps allow some of that, which is how they get their revenue. But Weedmaps got in trouble in California not too long ago for advertising that was non-compliant.
That was down in California, and they didn't want to even take those listings off. It's like they wanted the revenue more than they wanted to be compliant, so they waited forever.
And so I think that this type of service is needed. I think this type of service will be utilized in the future. I do share your concern about the valuation, though. They're not the only player. They're not the biggest player, and maybe the rush to go public to be first um, is sort of driving some of that value, Josh.
Yeah. Well, I know that Leafly is struggling. They had to lay off a bunch of people last year, and probably not any better with the pandemic. But we're going to move on to the other valuation of 2.8 billion from Verano going public. So I think Verano was supposed to merge with Aphria, or they were, there's going to be a big merger with them, and then they pulled out at the last minute. I don't remember because there's so many different deals, but regardless, it was probably, I think it was maybe Canopy, but obviously this valuation is large, and so something unraveled. But this is another multi-state operator, Verano Holdings. They're going to go public with almost a $3 billion valuation, a sign that capital markets are warming up to the cannabis industry following a chill in investment over the last year. Yeah, reduction in mergers and acquisitions as well as overall investment as people kind of hold back. But as soon as you saw more states after that November 3rd election, and then the decriminalization and with the MORE Act, and then you saw the UN and the World Health Organization all kind of chiming in and saying that we should be moving in a different direction, I think you're going to see a lot more investment.
I think it's becoming more friendly, less risky to invest in cannabis. Canada, with the Canadian Stock Exchange and the TSX, came out really early, which flooded those markets with investment. But now we're seeing some maturation in the market where it's not just, ooh, cannabis, buy it. Now it's like, okay, let's pay attention. What's behind this buy? And it'll be very interesting to see how Verano does, where the market is a little bit more mature and people are paying much more attention to financials, products, risk, um, because the rush to be first is sort of done. We'll see.
Yeah, it's interesting. They're going the route of an RTO. It's a much cheaper route. You can spend less than a million, like around 800,000 for a reverse takeover versus 4.2 million for a traditional IPO. So they're using some smaller brokers like Canaccord Genuity and Beacon Securities to kind of help underwrite that deal for 75 million in shares through a reverse takeover of Majesta Minerals. They're a shell company listed on the Canadian Stock Exchange. That's going to make them the third largest cannabis operator in the US by revenue and fifth largest by valuation behind Curaleaf and Cresco, but not as big as Aphria and Tilray. So this came out rumors the night before, and then bam, just kind of came out this week. Um, so Tilray, Aphria, they're going to combine to form the largest cannabis company in the world. Combination that would result in a Canadian $4.8 billion entity. And the new company would keep Tilray's name and stock ticker. So Aphria shareholders, they're going to own 62% of Tilray stock, according to the terms from Bloomberg. So this is a reverse acquisition of Tilray. So Aphria is going to pay 23% premium to buy Tilray. And so, despite getting a 25% bump on the news and pre market trading on Wednesday, the company is trading roughly 96% lower than its highs from early 2018 when it was trading at $300. Not anymore. And, we've talked a lot about Brandon Kennedy, sort of sitting back on the sidelines, waiting for like Coca-Cola or somebody to buy him, not really understanding the market, not really knowing where to go, what to do, because he doesn't want to be a part of the industry, didn't come from it, and brags about that. And I've just kind of been sitting here chuckling, waiting for him to flounder or get what he wanted. Time could have been okay, and maybe somebody would have bought him eventually, but here we are.
This is big news. Tilray is one of the big five in Canada, and to see a wholesale acquisition of Tilray is very interesting. What does that mean for Aurora and Canopy and some of the other big players in Canada? We've seen 2020 be a struggle for Canada, cannabis industries as a whole. It's not one particular company. It just didn't generate the profits that folks expected. And again, with the rush to get into a legal market, this is interesting though. Tilray is being acquired. I do think that is the management's goal at Tilray, was to sort of build it and they will buy it. And it came to fruition. Maybe not at the valuation they expected, but they did get acquired.
Mm-hmm. Yeah, they did, and it looks like it was a good deal for Tilray. Looks like Brandon Kennedy is going to be a board member of the new company, and it's said that that he's got some options or whatever. But
Hmm.
basically, yeah, he's going to have to find something else.
Well,
He can pursue growth opportunities. That's kind of like go get out of here, figure something else out.
what is most telling for me, if I was an investor in Tilray, I am not. I missed that bandwagon when the valuation skyrocketed. But this is an all stock deal. This is interesting because very little cash is changing hands here. And for so for example, if you invested in Tilray, and this merger goes through and done and over with, then you are now an investor in Aphria. That's not money in your pocket. That's not a cash out. That's not an exit. It means you have stock in another company, and that is always very interesting to me.
So they had some investment from Anheuser-Busch. I think they've had to write that off because no beverages really worked out. Not to the tune of $1 billion or $3 billion that we saw with, Canopy or Aurora. But I think we are going to see a lot of layoffs. There are a lot of redundancies. And so, I don't think we've heard too much about, $250,000 greenhouses shutting down. I don't know if they're overproducing to their other counterparts, but an all stock deal does set them up in a position where they're going to be lean enough to, maybe take advantage of the US like they want, as well as Europe like they're anticipating, and finally come out with some kind of beverage. So they haven't had to write off a lot. Maybe this will give them that opportunity.
Yeah.
But they're going to be well positioned, I think, by combining and then leaning themselves out.
Yeah, this is going to be. I think we're going to see a lot more of this, Josh. You and I spend a lot of time talking about M&A activity, and I suspect that as the Canadian market matures, you're going to see even more.
Yeah. So Tilray shares, they've fallen 54% in 2020. Aphria shares have risen 56%. You have to come back to Talking Hedge and see what happens next. I want to thank my guest, Katrina Glugowski, angel investor and attorney. Thanks for being back on the podcast.
Thanks, Josh.
With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.